Welcome to another episode of the Underdog Physician Podcast. Today we have Dr. George Ozoude, who is an orthopedic surgeon specializing in sports medicine and is the founder of Time Health Capital, a real estate syndication investment firm. He's on a mission to help physicians achieve financial freedom through the power of real estate investing. George, thank you so much for coming to the podcast.
Anish, thank you for having me. It's a pleasure to be here.
Likewise. First thing is, let's get started. Tell us your story. Tell us your underdog story.
Absolutely. Yeah, so I've been in medicine since 2004 when I started my medical school journey. Went into residency in orthopedics at the University of Illinois in Chicago, and finished a fellowship in the Baylor College of Medicine in Houston, the medical center. And since then started working with the University of Texas here in Houston, and was employed with them for 7 years. And then I started my own practice in January of 2022. And my journey has kind of taken me from, getting in an academic and community practice and kind of seeing the writing on the wall with the challenges of corporate medicine, and getting inspired to really practice medicine the way I always envisioned, and started out on a journey to figure out how to get additional passive streams of income, how to, number one, secure myself, and be resilient in the face of anything. And then number two, be resilient regarding how I wanted my practice to look. And I felt like passive streams of income was the best way to do that. It allows you to make decisions independently and autonomously. And so I started looking at different ways and avenues to get passive income. I looked at everything. I looked at, stock market, investing, trading. I looked at business venture capital type of investments and startups. Looked at real estate, and really settled in on real estate because at the time,
Right.
you can imagine I'm a busy surgeon in a growing practice. All those other forms of trading and investing require a different skill set and time commitment, whereas real estate didn't necessarily require the same time commitment. It wasn't as fast moving, it wasn't as volatile. So I felt comfortable with real estate. I started with the idea of investing in medical office building, like a surgery center that I worked in, then transitioned into looking at my own portfolio, bought my own house, started thinking I'd buy one or two single family homes per year to get to a point where, I just have this huge portfolio. But then I started looking at the reality of owning your own single family homes. And while I think you can do very well in that space, I realized that it's a full-time job to be a landlord unless you have all the systems set up. And even then, you're still the main point of contact in the landlord. And then I realized I needed something more efficient because I was still busy in my practice. And I found syndications, and really fell into the large apartment syndications. But come to find out, you can syndicate many different things, including single family homes.
Oh, really? Okay. Okay.
So yeah, real assets, anything can be syndicated. But like most people, we start on the large apartment side. And so in 2018, I made after about a year of research and review and networking and asking questions, I made my first investment into a large apartment in Dallas. Okay. And then since then, I've been invested in 25 similar deals as a limited partner. And as I transitioned into private practice, I started becoming a capital raiser, investor relations personnel for folks who I've invested with as a limited partner. And so that means I just joined their general partner team to help with the operations of the syndications. And so I've done 3 of those since last May.
3 as GP and 25 as LP.
Yes, 25 as LP, 3 as GP, co-GP.
That's pretty impressive. I think one thing, George, and that's an amazing story, amazing journey. And I like the fact that your mission to not only, to help other physicians get financial freedom. I think one thing that I really liked was that you said you took a year to really understand the real estate market. Tell us a little bit more about what you did and what
Sure.
could the audience do, who are maybe in similar shoes as
Sure.
you were a few years ago.
Yeah, I always say the two most important things is to be social and be curious.
Yeah,
And that means, network and go meet the people in the space. That way you kind of figure out who's legitimate, who's not so legitimate, because that's very important to kind of know who else is in the space. It's very hard to do this alone. It's going to be a team sport in some degree, whether you're working with partners or you're working with a bank and a lender or a broker.
exactly.
It's a team sport. So really get out there, get out of your comfort zone. It took me, hour after hours, I would finish a full day of work or, call and I would go find the 6 p.m. or 7 p.m. real estate meetup in Houston and just go network. I would also educate myself by staying curious, and I use many different sources like real books, audiobooks, podcasts, YouTube channels to start to learn the concepts and the language of real estate and real asset investing. So those are the two things that I really would say you got to kind of just devote time and effort and energy and even some money. You have to actually devote capital,
Yeah,
because you're paying for some of these meetings and
yeah,
webinars and weekend courses. There's some capital investment that goes into it as well. So,
exactly. Yeah, I think you can. I personally, that's something that I've been working on a lot myself, is investing in
yep,
self growth, self development, and getting good quality knowledge from people who are experts. For
absolutely.
to
The
develop.
information's out there. It's available. It's
Yeah.
just a matter of making the time and the effort.
Yeah. Any particular book, or any podcast that you felt like had the most influence on you,
Yep.
or
I think
decision?
my favorite two books are Cash Flow Quadrants by Robert Kiyosaki. A lot of people know his famous book that came out before that called Rich Dad Poor Dad, which is a great book, but I even like Cash Flow Quadrants more because it's even more impactful and practical
Mhm.
when you really see it, how he lays it out as far as different ways to earn wealth.
Yeah.
And I think Tax Free Wealth by Tom Wheelwright was also very impactful because taxes are the single most expensive thing we pay for in our life.
Yeah.
And so learning about how the tax codes work and how you can use it to your advantage, I think is a game changer, especially for physicians since we're in the highest tax bracket.
Yeah, those are two great suggestions. I'm a huge fan of Robert Kiyosaki myself, but I'll post the link to those two things. Any podcasts in particular?
Yeah, I really like the real estate guys. I'll full disclosure, I'm actually part of their syndication mentoring club, but I think that's for a reason. I've been following many different podcasts, and I think their podcast does the best job of explaining it to a beginner as well as to an expert. And it's a very digestible way of learning about the whole real estate and real asset space. The other unique thing I think they do well is they have a macroeconomic and historical approach. So it's not just about investment and making a return on your investment. It's actually about personal sovereignty, financial freedom, and autonomy. That's what they're rooted in. And I think that's a big why. And to do this kind of, underdog story, you have to have a big why that will push you. And so I like that, their angle of their podcast. So the Real Estate Guys Radio.
Speaking of why, I guess that's a good point. I'm definitely gonna post a link to that. Like, what would you say to someone who's trying to figure out their why? Because a lot of us, early stage graduating from residency, what's like the best advice you've gotten to figure out what your why is? Besides the clinical medicine, helping patients, how else do you figure out your why or your purpose?
I think the best way to do that is to ask yourself that question over and over and over again. So when you come up with an answer to why you think you do anything,
Yeah.
ask yourself why. And then the answer to that question, you need to ask yourself why again. You
Mhm.
keep going till you exhaust all the reasons. And usually at that point, you're at something very, very core value related, something very emotional. And that's where you get to the root of why you do anything, right? And you have to keep asking yourself those questions as to what it is you're doing, why you're doing it. So there's books out there that talk about this concept of, 7 layers of why, and
Oh,
really getting to the root emotional cause of the actions and the behaviors that you take.
that's a great point. So a lot of introspection to figure out what your why is, because that's ultimately what's going to push you when you encounter setbacks.
Right.
Um, so I guess with that said, what's like when you started off, what would you say was your biggest setback? Maybe it could be something with your first investment or any subsequent investment.
For sure. Yeah, I've had setbacks on many levels. Obviously starting your own practice is a huge undertaking. We
Yeah.
don't get a lot of any business training at all. So, I'm definitely learning the ropes right now. I'm 18 months into it. And I've learned a lot of things. I've, like I said, invested in 25 deals. Not all of them have gone, as planned, especially in this climate where we have high interest rates and supply chain challenges. So we're dealing with a couple of properties that are in my portfolio that have had to discontinue distributions. And for me, that's huge, right? Because my whole reason for doing this, one of my reasons for doing this is to have that security of the passive income, the additional
Right.
cash flow.
Yeah.
And so I go back and look at those deals and say, okay, what didn't I see in this deal that's affecting me? Obviously, there's a lot of factors that go into it, but could there have been something different? Now that I can look back with hindsight, is there something I could have looked at closer that could have decreased my risk? You can never get the risk to zero, but can you decrease the risk
Right.
of situations where deals go not as expected? Now, granted, I haven't lost any capital yet. I haven't lost money. I had deals that just slightly underperformed, and most of them have overperformed. But we're definitely in a time period where the distributions are being held, and some have even had to come back and ask for capital for the partners, the limited partners. So these are challenges. These are real challenges that you face, and they're part of every cycle. And so I'm learning from them. I'm happy to learn from them. They're all lessons to me.
Yeah, and I feel that learning is part of it, and also it makes you more informed for your next deal. So
Absolutely.
that's awesome that you're keeping that perspective in mind. For some of us who are interested in investing, in this climate, like you mentioned, what are like some of the best, like top three things you would say to look out for that would be different, like in 2020 or 2021, just because of the economic climate is so different now.
Yeah, still number one thing, if you're a limited partner, is to look at who you're investing with. That makes the most difference. The other two things that you look at are what does the market look like, meaning the location and the economic policies. That's the market. And then you look at the deal itself, what kind of property it is, or is it, and then what kind of financing is being used. But you can have both of those things in check, meaning the market and the deal. You can check off the checklist. But if the operator, the lead sponsor on the deal, is just not competent or capable, they can take that good market and that good
Oh,
deal, and
definitely.
still you can have a problem. So
Yeah.
this absolutely is the number one thing. I would recommend several things to look at the sponsor. You want to look at their track record. You want to look at how long they've been in business, how their reputation is. Do they do what they say? Have they delivered returns? Have they had problems? Have they had challenges? Because as doctors, I always make the analogy is if you have a doctor sitting in front of you who tells you he has never had complications, then you have to raise a red flag to that.
Right.
In fact, that's what we do residency for and fellowship is
Yeah.
because we want to train under, people who, we get to see and learn from their challenges, right? And
Right.
so, operator who's never had a challenge and if they've been in business for a long time, I would question that.
Yeah.
And actually, is maybe a good thing to see that they've survived their challenges. That makes them, like you said, sharper, stronger for the next deals, right?
Yeah, maybe if they've gone through one economic cycle, perhaps maybe
Exactly.
they.
Exactly. You want to know that they know how to navigate in a tough environment. So 2007, 2001, these were challenging time periods in the economy where it was hard to just throw money at the wall and make a good return, right? So that speaks a lot if they've gone through those cycles.
Yeah, yeah. No, that's a great insight. I think definitely a lot of my audience are definitely newer, just like myself in terms of when it comes to investing. So that's a great tip for them. And I know you have your own real estate investment firm, Time Health Capital. Can you
Yes.
talk a little bit more about it?
Yeah, absolutely. For a long time, I was back and forth on whether I wanted to be a general partner or stay as a limited partner. Because honestly, someone can do really well as a limited partner if they have physician income coming in and they're smartly putting it, wisely putting it into good investments. And I had my number. I had my target date and my target number of like how much it would take to replace my physician income. And
Or
you
like
know,
passive income, right? Like how much passive income it would take.
how much passive income it would take. And I thought that that could have been, what I wanted for the rest of my life. That would have been just perfect. A couple things happened. COVID came and it sped up many timelines, including mine. We were dealing with a lot of things that I didn't agree with that were going on in the hospitals and the clinics, and it pushed my time frame forward to leave that model, which is the corporate medical model, and head towards a model where there's more autonomy and more, quality, in my opinion. And so, that absolutely affects timelines. It affects how I was investing. I went from a busy employed practice to growing a practice, and now I actually had more time.
Mm.
And now I wanted to do more real estate. I had the time to devote to helping other physicians. And I know that other physicians are facing the same frictions that I faced in the corporate medical model. And so that became part of the reason I wanted to help other physicians have a way out, and I think it helps a lot when you see another doctor in the GP role. It helped me a lot. I've invested with doctors who are GPs, and it feels like they understand they speak your language, because we get approached a lot for investments in many different things, right? And we don't know really who to trust. So when you see a doctor in that space, someone who talks like you, looks like you, they speak your language, they know what you're going through, it makes a difference. And so I wanted to be that for more doctors,
Mhm.
and allow them to feel more confident about investing in these assets.
And you're primarily located like investing in one area or one part of the
For
country or
my investing,
yeah.
I'm actually across several different asset classes. So I call myself a real asset syndicator, not a real estate syndicator. Real
I
estate
noticed that actually. Yeah, I
is a
noticed that.
subset. And that's the real estate guys training. They don't just focus on, residential. Anything that's a real tangible asset has value, especially when you compare it against a dollar that's being inflated away.
Yeah.
And so you can invest in self-storage. You can invest in physical metals. You can invest in ATMs and car washes. These are all real assets: oil and gas and energy and minerals, water, farmland, agriculture. I've invested in all of these things. So it's not just residential real estate. It's all real assets that you can syndicate and get a great return on.
Yeah. No, that's great. And it's good to know. I'll definitely post a link to your investing firm as well.
For
Um,
sure.
how do you like, what's like your vision, like your 5, 10 year vision? I know you said mentioned that you want to like have enough passive income to replace your active W2 income, but in terms of like your vision for your for time health capital, or just how you foresee your like medical career and your real estate investing, what's like, how do you foresee all of that?
That's a great question, because you can do this a lot of different ways, right? As a physician, you can continue to practice and do real estate.
Yeah.
You can, go part-time. You can stop doing medicine altogether.
Right.
For me, I open a practice that it's all direct pay. It's no insurances involved. Again, this is the autonomy angle.
Mm.
So for me, I see myself building that practice. I always envision myself practicing medicine. Maybe it won't be to the degree of full time, but to some degree, we've, put so much time and energy towards this that I love doing it. I love operating. I love taking care of sports injuries and orthopedic injuries. So in 10 years, I hope to have a full comprehensive medical practice with a surgery center that we syndicate potentially. You
Oh,
Medical office is another thing you can syndicate. So, and where we're serving the community free of any insurance companies and government oversight, in a true concierge direct pay model that's affordable. And then on the time health capital side, I probably will be doing just as much real estate and real asset investing, and capital raising and investor relations. as I would be doing on the medicine side. So it's going to be a lot of work, but I foresee myself with the investor base of 200 physicians, healthcare workers, nurses, pharmacists, folks who are really looking for a solution to the corporate medical model, and they want passive freedom, passive income, and financial freedom and their autonomy. And so I see myself with a solid core of 200 investors, getting great returns for them, helping them grow their investor communities.
Yeah, yeah.
Because I do think it's a network effect, and providing value on both of those fronts.
Wow, that's amazing. Yeah, that's a great mission. And you wish you the best, and definitely excited to see where you go with the time health. Um, what's I think the other question that I had for you was like, how do you like manage? Because it seems like organization. It takes a lot of organization to be able to have a practice, to be able to have a company like this to grow and scale. So
Yep.
what are some of the things you do on a weekly basis to make
Yep.
sure time for all important aspects of your life?
Yep, this is a crucial question because it is a time management feat,
Yeah.
and I think a lot of things revolve around how do you free up the time you already have. We all have 24 hours in a day,
Right.
so for me, there's a lot of things I had to lower down on the priority list of things to do, and other things I had to move up on the priority. I have to prioritize my time, my health, my sleep, my vitality. I know other doctors who talk in this same vein. Dr. Vikram Raya, I believe in what he teaches as well. Like you really have to take care of your internal house first, and then you're able to produce and provide and deliver value to the rest of the world. And so that's huge to me. Healthy living, healthy mindset. I think once you free up your time and your health, everything else follows after that. And so once you get to the organization side, systems are important for sure. And you need good help, virtual assistants. You want good leverage of technology. There's great ways to leverage, everything from the moment you wake up to the moment you go to sleep, apps, different softwares and programs, finding good partners that you can lean on so you're not lifting the whole load by yourself. So I do a webinar with my co-host, Bio Fasanya of Dr. Breathe Easy Capital,
Mhm.
and he and I share the load, So these are key ways to leverage other systems in order to free up your time and energy.
Yeah, that's amazing. You mentioned healthy mindset, vitality, um, good partner. What about role of mentors? Any
Huge,
for mentors?
huge. I think that's huge. And that can look a couple of different ways. For me, I have a mentoring club, so it's kind of a mentorship by committee. We have experienced members of that mentoring club that are able to share insights. And you can also go with a direct mentor, like an individual, almost apprenticeship type of experience, where you find someone who you align with and who has a vested interest in you, someone you can help, boost their organization and their company, and then in turn they'll give you the knowledge and the teaching and the support. And I think this helps a tremendous amount. So I've gone the mentoring club route.
Mhm.
I wouldn't be opposed to having a mentor. I think that could help as well. I think in a similar vein, having an executive coach, something along those lines, folks to kind of direct you, maybe not, in the same way as a mentor, but to give you that clarity and that support when things get tough. This is important too. And I've used that as well.
Yeah, awesome. As we are wrapping up, George, what's like one piece of advice you would give to our listeners?
Hmm. I would say, I would say be persistent.
Be persistent.
You're gonna fail, and that's part of it. It's like going to the gym and working out. You work out till failure in order to get the growth.
Right, right.
Failure is important. Like, don't be afraid of it. Persist through it. It actually makes you sharper. It makes you stronger. It makes you better capable to deal with the challenges that come with this type of endeavor. So persistence is key.
Awesome. That's a great tip for all the listeners out there. Persistence is the key. If they want to reach out to you, what's the best way they can reach out to you?
Yes. So you can reach me at george@timehealthcapital.com. My website is www.timehealthcapital.com. And then I'm most active on LinkedIn for social media. I'm on all platforms, but I'm definitely most active on LinkedIn. So you can reach me there.
Awesome. Thank you so much, George, for sharing your insights. It was a pleasure to have you.
Absolutely. Thank you, Anish. I love what you're doing. Keep it going. Keep persistent, man.
Thank you. I'm just going to